Good morning and welcome to Equity Story, Wednesday, the 1st of February. Trade Watch today with Claude. So welcome, Claude. Before I go on, I'm going to quickly go through the Equity Story disclaimer so I can move on to some interesting stuff we're going to talk about. Everything we talk about today is going to be general advice only. So stocks, fundamentals, and technicals. That's what we look at. Claude, we're going to be talking about today. There's probably about 4 announcements I want to go through, but of course, we're going to have our favorites talk about thought of the week. And I know I have sent you a little email this morning or a text saying, can we please just revisit those quarterlies and let's talk about our favorites, mention some of the outstanding ones that you're probably going thinking if they report well, maybe in February, I'm going to be buying something on those lines. So I've gone through, I've got about 6 to quickly go through. I know you've got a few as well. So we're going to talk about that in a sec. Before I do that, just with the markets last night, they were positive. So hopefully we're going to have a little bit of a bounce today on some of these stories. The other thing I was really like, well, what's going on was coal, right? Because yesterday we were talking about somebody's mentioned, what about the coal stocks? And we saw in Trading Economics that the coal dropped like 25% on the day, thinking, oh, this is going to be right. This has got to be some sort of a typo. So I'm looking at, and I'm going to change the screen quickly to the actual charts. The coal stock obviously don't look brilliant, but it's not. I don't think it's been reflective that there has been a 25% drop, because otherwise I'm probably thinking this is going to go down to $5 or $6, something like that. So from that point of view, let's see what happens. Play the charts as per usual on your coal stories, and end of the week, remember. So we got to wait till Friday and see how these things finish. And this is Whitehaven. Let's look a quick look at NHC and some of the others, and then we'll take it from there. So we'll talk about it on Friday anyway to see how they're going. This is probably to be better than WHC, but anyway, all up, just be careful when you're trading these things, follow the charts. Now, just the 4 stocks that's reported this morning, or at least put some announcements out. One is KPG. Just want to have a quick look at that. It's not trending at all. So for us, you shouldn't be in there as a trade. The update was okay, but this story called for me, it's just, I'm not sure if you know anything about it, but this story is just pretty much all acquisition growth. There's really nothing there exciting from organic or, from a point of an investor that you get excited about. So for me, pass. Another one, it was CCP. They reported, I did an update today, which is confession from them. And it wasn't fantastic. So I think they are down about 5%. They're basically saying it's a one-off, and they're still going to hit the targets. This is the profit that was affected, and they're still on target to achieve the full-year guidance. We'll see. It's going to be a struggle, I'd say, to do that. But again, not tradable at the moment. Just struggling on the charts. So pass for me. If you want to jump in at any time, Claude, by all means, go for it. If not, I'm going to go to the next one, EVS. And another one that we sort of like, but we don't like, I suppose both of us. It's an interesting story, but it just hasn't quite delivered fundamentally for us. So again, it's trending below trends. Just a quick update today from them. Wasn't strong enough for me to even get excited about. So pass, still pretty messy. Used to be, still is. Wait for better times ahead. And last one is LDR, and I want to talk about it because it's up 116% today, right? So I had a look at this one this morning, and it said outstanding drill results. And when you look at it, on paper, look fantastic. So 100 and something meters at 1,000 grams per ton, silver equivalents, right? This is excellent drill results on face value. However, there's one probably thing in there that you just got to take into account, is that they really drill it down the guts, right? So you've got to shoot. If you drill it down the guts, of course, you're going to just continue. You're going to be continual mineralization in that drill hole. So on that premise, just be careful, because I think the true width of it is much, much smaller than that 110 meters suggests. But nonetheless, pretty strong grades of I think zinc and silver combined. So definitely maybe one to look at to see how it finishes at the end of the week. Would I be jumping in this today? No, I wouldn't. I think there's a bit of FOMO in there for sure. So just to watch to see exactly what happens by the end of the week. All right, let's jump into our section on thought of the week, Claude, and I'll let you go, of course, because I just had a bit of a chat of those 4 stories. So, can you please tell me what stood out to you quarterly wise? That you think that surprised you pretty much, either bad or good. Doesn't matter. Tell me what you thought.
Well, I wanted to talk. The biggest good surprise I probably saw is DUG, and that might be a surprise just because I wasn't very on top of it and what was happening with this company. And I think that's a real one that's put on the watch list of many investors. Problem, of course, is that it's driven by strong services revenue. So one really needs to get to the bottom of how recurring are these services revenue in nature. But it does fit in nicely because I've recently been studying that IT services sector just because, sometimes you can get the stocks in it at reasonable valuations. If there's good demand, profits can pump. It's a bit cyclical. I think we were discussing off air how sometimes, it pays, like sometimes you want to go with the times a little bit. And if the cyclical stuff's pumping, then one is tempted to go in. Of course, you don't want to be always following the latest trend or you'll be the last person every time. Anyway, so I think that's some of what's going on there. Probably decent setup in terms of these guys exposed to the resources industry, which has been going all right last year. So need to do the dive on how sustainable that might be. This is generally a company that I would be looking to buy when it's profitable. And that is exactly why this quarter was relevant. And this is why we're talking about it. And, looking forward to diving into it a little bit deeper because I sort of lost touch with this one a while back. It wasn't really performing. And they actually are just profitable in this exact quarter. So who knows if that's going to continue, but that means that they're now in the zone where I would buy it. And as you can see, the market's already reacted. So it's not like I'm going to beat the market for speed on that one, but that's where we are. And that's probably the number one to call out.
Interesting, Claude, is that the actual market started liking this story again back from December. So they obviously sort of saw that something's getting better with this company.
Well, what a run it's been, and I just wish that I got involved in that and noticed what is happening, because clearly the buying point from a fundamental analyst point of view, which is of course why actually we can use the charts to help improve our timing, and I'm totally open to that and I want to do that. But it's interesting you say that, Pete, because just on the 6th of December, they came out and said that they'd secured $24 million in new services products in the 5 months of financial year, up 380% on the previous corresponding period, and a material increase to the entire revenue last year.
That's impressive.
And that was the hint. And that was actually the pre-warning of now what is a strong quarter. So this strong quarter's just the proving up of that announcement saying, yep, and look, we've got some cash coming in as well. So look, that's why that was the buy, Peter. I'm sorry that we both missed that.
That's okay. But the thing is, maybe it's not too late, right? So that's why I suppose we're going to deep dive into this and see whether this is genuine, whether this actually can keep going, not just a one-off, like you said, a quarter, and then it sort of drops off again, and maybe it will come back to the trend again.
Yeah, I feel like there's every chance that, they've got this massive contract. Well, let's see though. Did they say one contract? Totaling. Yeah, so I'm not sure how many separate contracts it was. Look, definitely we got to dive into this because it could keep. Is it the switch into a secular change where they've found a good product market fit and the winds are going to keep flowing? If you get into that kind of business before that, that's when you get the massive gains. All those years. Yeah, it's happened to me before. So it's not always the case that it's just one good thing. Sometimes it's a step change and they've got that product market fit now and they've got the compelling offering and they're going to get the momentum. And that's brilliant when you have that. So that's why we've got to look at this one. That's why it wins the quarterly challenge you sent me this morning.
Ah, very good, very good. Because we haven't actually talked about it, so good one. I like it.
That was my favorite one. Anyway, so then also SHL, so not SHL, CHL, Camplify. Okay. This one less surprising, just because you would 100% expect it to have a strong quarter when it's reporting its December quarter. The reason for this is in Australia and New Zealand, where the majority of the people are going to be hiring their camper vans. Obviously, we did get our school holidays from mid-December, and they run all the way to the end of January. And also, people perhaps a tad less likely to be doing the camper van straight after school holidays or over Christmas. Of course, some people would, but those people that are doing their travel in December, they're going to provide receipts from customers because they're going to have paid in this quarter. But what's more, all the people that are doing their travel in January are also going to put in their receipts from customers, because not all, but most people will, because if you're going to plan a camper van holiday, you're going to expend $1,000, $2,000 on renting some camper van, plan your route, all that sort of stuff. You're not going to, the van, securing the van is key to that. You're going to book in that quarter. You're going to pay in the December quarter. That's why the receipts are going to be super strong in that quarter. Camplify itself hasn't paid out that money yet to the actual owners of the camper van, because their camper vans haven't been rented out yet, which happens in January. So, of course, we're going to expect a great quarter this quarter. Look, the market reaction probably tells you that it was a little bit greater than people had put it estimated. And this of course, needs to be listened to, because Camplify's stock, I was just telling you before my love of, disruptive, high growth, transitional companies, which are those smaller, high risk companies. And it's just been a horrible market for them lately. So that's the biggest downside of Camplify. Within this set of companies, these guys seem to have a compelling product market fit. And they're generating significant revenues. They've gotten good growth. They're doing it by acquisition. They're doing it by actually organic growth as well. These guys are really changing the landscape of how these holidays are done. So I love to see that. And as a result, that's a top stock on my watch list. I literally probably would own it if it wasn't for the fact that we've just been having a terrible time with the high risk stocks over the last few years. So I've been, not last few years, just the last year. And I've been sitting on cash and sort of waiting, or when should I get in? This is the kind of company that when it starts to move, I wouldn't be surprised if we do see FOMO. And it's one that I'm tempted to just take the pain and be like, I'm just going to buy some just to...
I love the fact, though, what you did say, and this is why maybe I'm a little bit more cautious, is I want to see this next quarterly to see how the cash flows flow on from the previous quarter to this quarter that we're currently in.
Well, that's it. That's the gut feel, is I'm like, do I really want to buy it right after the good quarter? That's the cyclical good quarter. The contrarian in me is saying, I want to just wait until after the bad quarter when they pay everyone, but nobody's booking new holidays in February and March because it's going into winter and etc.
Well, anyway, look, I think you got time on your hands. The chart is not fantastic. It probably still needs to do a little bit more. So I think, generally speaking, we're going to see, we're in the reporting season anyway, so we're probably going to see them coming up with some sort of a guidance for us over the next 6 months. So then you can make.
Well, the other thing I love to get from these guys, which you don't get in the quarterly, is I love to get a better view of what is the sales revenue from the actual listing businesses they have, because they do have a few different moving parts in there. Insurance, different business models that account for revenue differently. They resell a few camper vans and stuff like that, and all of those things can influence the situation. And so it's good to just understand how the actual revenue just from the booking fees that they take a percentage when someone else is renting out their camper van. It'll be interesting to see how that's faring, because that really is the key metric for me in terms of proving up the sustainability in the business. The rest is all just Flotsam and Jetsam.
Okay. What else have you got? Any other quarterlies?
Now what were we talking about before? We were still saying on good ones, aren't we? What were the good ones? Yeah, so I think we talked about MDR before, which we can revisit in the list of good quarterlies.
Let's see if they got on with it. Because remember, we talked about it. The chart starting to look much better. Let's see if there is a follow through from what we've seen. So it's actually not too bad. It's actually still above trend, which is decent. So that's a positive. But
and that's kicked on since the actual announcement as well. So that went to like 26 or whatever, and that's kicked on from there.
There you go. So that's decent. Maybe there's a bit more belief from investors out there.
For sure. That was an absolute knockout result from them. So that I only didn't bring it up because we already talked it last week, I think. So yeah, that's my three. I think, you mentioned to me, obviously, Volpara, which I thought was very good as well, but albeit similar story to Camplify in that we're probably looking at a weaker quarter next quarter. So I'll probably see what the damage is next quarter, then maybe jump on if the damage is not too bad. And if you sort of just imagine, they had a lucky quarter this quarter, they're going to have a slightly unlucky quarter next quarter and take that into account, it could be a situation where the market sort of shrugs and actually that it's come down a little bit by then. But again, it also harks back to that part of me still, shell shocked from having these things can be super little volatile stuff. So it's not your bread and butter core investment either that we're talking right now.
That's all right. But at least the quarterlies were decent.
That's the nature of the quarterly reporting cash flow companies are generally the ones that, don't have profits. So
that's exactly right.
So it's always going to be it's going to be a little subset there.
All right. So let me talk about my ideas. And look, when I say ideas, the quarterlies that I thought were pretty good. So first of all, I agree with you. VHD surprised me on the upside, where I thought, okay, there's definitely a change there in the way the cash flows have been performing. So that was decent. So one to watch for me, and then most of these are watch. Couple of really I need to do a bit more in-depth research, and I will. And one really that for me I really love, but I'll leave it till last. So that was pretty good. I know we talked about probably M70 to death, but that was another one that was pretty positive for me. I was quite positively surprised that they've come up with a nice quarter. It's come back a bit, so a bit of FOMO come back a bit, so it's not too bad. You wouldn't be trading this at the moment. The other one was DSE, one of my little favorite tech stocks that's held up pretty well. And I
left that one because as soon as you said it, I was like, oh yeah, that's right. That is a good one to talk about. And
but I like the fact that there's a consistency, Claude, with this one. You don't find many little stocks like this consistently coming up with good quarters, right? And they are really outlier in here, where every quarter they sort of seem to come up with numbers that investors like, which is nice. There's expectations are not over the top and not, somewhere in the between that everyone's happy with what they're delivering quarter on quarter. It's been trading sideways. I understand that, tech space is not an easy place to be, and it's still unprofitable. But generally speaking, I think with time, if they keep coming up with the consistent results, growing their revenues, which they are, I think we're going to have some movement upwards in a not too distant future. But I love the reason I mentioned it today. From the surprise for me is the consistency. I just love this story. So that's a good one for me. Another one is SDV. So I know I talked to you very briefly about this. I wanted to bring it to attention this one, because the surprise for me is the amount of revenues they're getting now. They've sort of moved up to that almost 50 million for half revenue. So on that trajectory, they can almost get to about 100 million. And you think to yourself, hang on a second, I need to have a look at this company in detail. Can they be profitable? What sort of margins can they have out of this business? Because if they can get to some sort of a profitability, this company is really flying under the radar for me. And I like the products, the OptiFlox, MaxiFlox. This is all stuff that is in demand by the resource industry, by the water industry, where it actually helps save costs, great efficiencies, and so on. So it's a nice, interesting space.
Yeah, I love the idea, Peter. Definitely going to steal, as you know, very keen to share fundamental ideas, by which I'm even going to steal that idea and have a look at it. Thanks, mate.
Steal away, mate. It's okay. I don't mind at all.
And we got to get across it. I think the key takeaways are get across SDV, get across DUG,
Yep.
and also Dropsuite continued attention there for me. Because, some of the other ones we talked about, it's been a bit of a sudden quarterly change. Dropsuite, I see more as like it's that more steady development, which is actually kind of calming to see and nice to see. And you just sort of, you can model it out, and you just have to hope that they continue on the trajectory, which of course isn't guaranteed, but it does happen quite a bit as well. So
it just makes it more attractive as an investment. When you've got some consistency behind a company, and you think to yourself, if they can just keep going with that trajectory, like you said, you at least can imagine where you can get to.
Yeah. So the other thing about Dropsuite has got to be said that you often see it did have its operating cash flows down a tad quarter on quarter, but it still remains positive, and that makes me feel better about a company if it just continues to remain positive. I had, we had a couple that basically fall into the negative. It's never as great, and it's always going to be a bit more of a weight on the share price. If that happens, even if it's just like an unlucky quarter, it's like good if you can always keep it above a certain point.
All right. I've got two more. So another one is Telix. And the thing is, the reason why I'm talking about Telix, and it's a space that I really don't go into, but it's actually made me go and look at this company. When I look at the quarterly of Telix, and unbelievable jump in revenues, right? 17 million, I think, for the quarter. You got to go, well, hang on a second. What have they got that makes them so interesting to have a look at? So I definitely did a bit more research on this Telix, on these products. And I'm liking what I'm seeing. Even though I'm pretty weak in this, really, probably when I say weak, very, very weak in this space. I still need to do a bit more work on it for sure. But I like the product suite. I like that they've got a lot of these sort of things on the go and developing. So I'm interested. I'm looking for the next CSL, so to speak, right? When I spoke about this company maybe a week or so ago, we're always looking for the next big thing in the pharma space. And I like that from the point of view, they've got some products that are actually getting that revenue recognition and some other stuff in development. So, why not? Why not another CSL? I know it's a big call here, but there is that hope that we're going to find one soon. So I'm really interested in this one. So that's why I'm had a look at it. And this one really surprised me because when 70 million in revenues, I'm going to have a look, and positive cash flows. I need to really have a look at this. So that's why. And the last one, and I really love this company, I have to say, really dire, a lot of shorters in this, really only just listed maybe 12, 18 months ago is SDR. And it's starting to look quite interesting, Claude, is because it's starting to get over these trend lines. And the quarterly for me, what the really positive thing and surprised me is the fact that they've hit the targets. They've really been upbeat, saying we're going to stick to our guns. They told us before that we're going to become cash flow positive, which they're not at the moment. They're losing quite a lot of cash. But the positive thing was they're still going to stick to the guns. We're going to get to the 2024, I think, quarter. We're going to be positive then. I'm liking what they basically, what they're saying, they're delivering. And this is exactly what you want to see out of this company. You make yourself comfortable when thinking, okay, they've been absolutely smashed. They're listed at about $8 back in the day, and on top of the boom of techs, smashed down to 3, even below 3. Is there value this? Possibly, if they can keep going. This is a company that's global. They've really got the number one position in a lot of their products. I'm loving this on a recovery basis. If they keep coming up, and we're going to get that little bit of return of risk on some of these tech stocks. And if there's going to be a return to risk on, I think this is the top tier companies are going to get the first love, and it's going to flow through to the bottom stuff. So this
if we are seeing the top tier companies getting that first love now, and it does flow through to some of the second tier stuff, I agree. This is probably a good option for that second tier because it's pretty big at $1 billion. And as you said, global, etc. It's not a sub scale. It shouldn't be. It's a strength and a weakness at the same time. It's like it's actually got quite a lot of revenue. So that's why you'd expect it'd already be free cash flow positive. That's probably the biggest negative in my mind. But at the same
100%.
time, at the same time, if they can, it's already got that revenue. So, if they can just get a 10% profit margin on 150 million revenues, which you think they could, then already that makes it, at least it's somewhat profitable. But obviously a software company can do a lot better than if it's actually at maturity and running along nicely, it can do tons better than a 10% margin. So you get a bit of revenue growth and then, a 20, even a 25% margin, and suddenly it starts looking pretty decent.
Yeah, I agree. And this is the thing. It's for me, the reason why it's in second tier is because they are cash flow negative at the moment.
That's
it is still high risk, of course, because we've got at least 12 months before we get to that quarter four. Can they keep going?
It being bigger and already liquid, if that does make the transition, you can definitely see it becoming a bit of a fundy favorite.
Yeah, exactly. And this is why I really love that quarterly, and I love the fact that they're sticking to their guns. And that, it looks like they're fairly transparent by saying, the reason why because we're spending. So in the future, you guys going to be benefit out of this, right? They're just basically spelling it out, saying that's the reason why I think we just got to spend that money to build out our business, to develop our products where you've got that organic growth, for a long time. So we're going to have some pain until we get there. And so I like that, the fact that they are just upfront there saying, this is what's happening. We need to do that. We are, we're trying to obviously grab that as much market share as we can. We are global. We are, pretty much loved by everyone that uses our product. So we're just going to keep going until we get to that stage where we can start easing off on the spending, and then we're going to start being profitable. And I love that. So this is why I thought this is one that really stood out for me from the tech space, where it's a negative cash flows, but it actually was very, very good. All right, that concludes our session today, Claude. So thank you very much for joining me and talking about our thought of the week. We've got
Thanks,
the start
Peter.
of
Always my favorite.
Yeah, exactly. No technicals at all. This is just fundamentals.
Just a little bit of technicals.
Okay, well,
I appreciate it.
Just so Dave doesn't give us a hard time doing the ATAs.
It's good it's good to combine them. I definitely I think that sometimes you get a better experience if you take a bit of both and consider both angles.
For sure. Anyway, thank you so much for joining me. Have a great day at the end of the week, and I'll probably see you on Friday.
Great. You too, mate. Have a great day. And everyone listening. See ya.
Thanks, guys. Bye.